Dear students, welcome to Swayam Shikshaa. We are here with one more important theme for prelims. This is basically national income. Of course, this is a very huge area and it involves a lot of concepts. But what I will try to do is, there are some gray areas in this particular topic where students have a lot of doubts. So I will put my effort in terms of addressing those gray areas. And that will give you a clarity exactly with respect to certain concepts. And let's see what type of questions were asked. In the context of Indian economy, consider the growth rate of GDP has steadily increased in the last 5 years. The growth rate in the per capita incomes has steadily increased in the last 5 years. So per capita income becomes important because it is in news that from 2014-15, if you talk about recent past now, it has almost doubled. Okay, from some 86,000 to 1.72 lakhs. So this area becomes important. There was one more question like the national income of a country for a given period is equal to. Okay, so this was one more question which was asked. With reference to Indian economy, consider the following statements. The rate of growth of real GDP has steadily increased in the last decade. So GDP at market prices has steadily increased in the last decade. So here the observation is UPSC is very much focused on trend-based questions. It's not just the concept. One is knowing the concept. Second is trends. Knowing the trends becomes important. Okay, so again we have a trend-based question in the recent past. So one was tax revenue. Another one was fiscal deficit. Again, it was a trend-based question. Increase in absolute per capita real GNP do not connote a higher level of economic development if it's a common sense-based question. So just because incomes are increasing, just because GDP is increasing, that doesn't mean development has come up. Okay, so this is a very simple question. And then with reference to Indian economy, consider the following statements. So share of household financial savings goes towards government borrowings, etc., or dated securities issued at market-related rates and auctions form a large component of internal debt. Okay, so debt again we will look into it later. Now see here. When we talk about the concept of national income, okay, so the first thing what we should understand is national income is measured using 8 aggregates. We have to understand this. It is measured using 8 aggregates. You cannot have more than 8 aggregates. It should be 8. Okay, so for example, you have GDP at market prices, or we have GDP at factor cost, or we have NDP at market price, or we have NDP at factor cost, or we have NNP at market price, NNP at factor cost, or we have GNP at market prices, and GNP at factor cost. Okay, 4, 6, 8. There's nothing else like 8 aggregates. Of course, basic price is a different concept. It is only an intermediary concept. Okay, so which has come up in 2015, new calculation, but 8 aggregates. So few things which we should understand here is, when I'm using the word gross domestic product, this domestic, okay, so what is this GDP? So it is nothing but the total final value of all goods and services produced within the domestic territory, produced within the domestic territory of India in one financial year. Very important aspect is, observe, final value of all goods and services produced within the domestic territory. Domestic territory is important in one financial year. Okay, so this domestic territory, of course, the definition of domestic territory will also include the net embassies and consulates. So Indian embassy in US is almost treated as Indian territory. Or net shipping and aviation. So that means, suppose there's an Indian aircraft, like say Air India is moving, it is above our territory, but suppose there is a sale happening in the Indian Airlines. Okay, so that will be part of India's GDP. So net aviation and shipping, okay, will all be part of India's domestic territory. So here the territory becomes very important, domestic territory. So where the product is produced becomes more important in the concept of GDP. Very important. Here much of confusion is never there. But when I use the word GNP, most of the time the confusion comes up in this area called GNP or gross national product. So when I say gross national product, it is the total final value of all goods and services produced by the residents of the country. Now this is very important. Residents of the country from within and outside, from within the territory and outside. This is something we should understand. So it is the resident. Now residentship status is different from citizenship status. For example, if there is a Chinese person who is working in India, Indian territory, he is working in India, and it's been almost more than 1 year. Residentship status comes with this tag of 1 year. Suppose this Chinese person is working in India and it's been almost more than 1 year that he has been working in India. He is a normal resident of India. He is a normal resident. Though he is a citizen of China, he is a normal resident of India. This is what we should understand. So GNP talks about the total final value of all goods and services produced by the normal residents of the country from within and outside. So please don't get confused between a normal resident and a citizen. Here, for calculation of national income, residentship status is more important. It is not about citizenship status. A simple example, people generally get confused. Will NRI income become part of my national income calculation? Now question is, when I say normal resident, here it is a non-resident. Non-resident income will definitely not be part of my national income calculation. Very important. Okay. So another important aspect is, when we are talking about the concept of national income, we are only talking about the productive income. When I say productive income means something that is coming from the factors of production. So whether it is through entrepreneurship, whether it is through work, or whether it is from rent, so it is basically a productive income. So that means when we say remittances or transfer payments, remittance is a kind of a transfer payment. So transfer payment will not be part of my national income calculation. Transfer payment will not be part of my national income calculation. Similarly, NRI income will not be included in the calculation of national income. Now, many a times, most of us know this formula. When I say national versus domestic, so we say GNP is equal to GDP plus net factor income from abroad. Okay. Now, when I use the word NFIA, net factor income from abroad, this NFIA it is only a factor income. It does not include transfer payments. It's only a factor income. So, NFIA will include something like net compensation to employees. That is nothing but wages. Net compensation to employees. That is like wages. Okay. Or the net retained earnings, which are retained, nothing but the profits of the company. Net retained earnings. It will indicate the net income from property. So that can be rent, net income from property. So when I say net income from property, so it does not include something like, it does not include transfer payment. Very clear understanding should be there. So factor income only. So here it is again goods and services produced. Again here NFIA, it is wages, profits, income from property. This is very important. So there is no transfer payment. Many students get confused that Why not remittances? Why should remittances be here? Remittances is a kind of a transfer payment. NRI income should not be part of my national income, because national income is talking about normal residents of the country. So when I say, let's say national income is income of individual from within the country plus from outside. In simple words, from within the country, income which they are getting from within plus outside. Okay. So in NCRT you will see national income is nothing but NNP at factor cost. But of course now from 2015 onwards we are calculating national income at market prices. Okay. So NNP at factor cost. So when I say NNP at factor cost, we are doing something like gross versus net. Okay. So gross versus net is nothing but, this is a very simple thing which we know. Net is nothing but gross minus depreciation. So it means if I have to get NNP is nothing but GNP minus depreciation. So these are some basic aspects which you should know. Okay. And UPSC never asks difficult questions. It will be basic formula based questions only. But if once our concepts are clear, for example, for a simple logic, suppose, let's say my brother is working in US and he has gone abroad, it's just been 6 months. That means he is a normal resident of India and his economic interest is also in India. That means the income which he is earning will be part of the national income calculation. Suppose my brother becomes an NRI. It's been almost 3 years that he has gone abroad and he has become an NRI. Now income which an NRI is getting will not be part of our national income calculation. As simple as that. Okay. Now suppose Hero Prabhas has got an opportunity in Hollywood. Now Hero Prabhas is a normal resident of India. Why is a normal resident of India? He has his roots in India, his economic interest is in India, but he is working for Hollywood, and therefore the money which he is earning in the form of wage is nothing but the net compensation to employees. Okay. Now Ratan Tata's company Tata is earning some profit. It has retained this earning and that money is sending it back into India. That is nothing but the retained earnings. Okay. So, and then Shah Rukh Khan is holding some flats, or he is running some restaurants or flats. He has given his flats for rent in UK, in London. And the rent which he is receiving, Shah Rukh Khan is not an NRI. Shah Rukh Khan is a normal resident of India. His economic interest lies in India. And therefore that income will be part of my national income calculation. That's something which we should understand. Suppose there is a foreign tourist or a foreign traveler. Foreign tourist or a foreign traveler is not a normal resident of our country. Similarly, if there is a foreign company in India, and in that foreign company there is, or let it be an Indian company also, there is a foreign person from US is working in this company. It's just been 6 months. That means he is not a normal resident of India. So since he is not a normal resident of India, his income will not be part of my national income. But if it's been more than 1 year that this person is working in this company, then he is a normal resident of India, and therefore his income is going to be part of our national income calculation. So that area should be very clear. So don't get confused between citizenship, etc. It's not about all Indians who are working in India, who are working abroad. Like this, there are multiple definitions in the book and you get confused. No, it is about the normal resident of the country, and how do you identify a normal resident? As simple as that. That logic should be very clear. Okay. So once these concepts are clear, questions are very easy here. Now let's go to the question here. Okay. So let's see, few easy questions most of the questions are easy only. Now if we see here, consider the following statements. Tax revenue as a percentage of GDP of India has steadily increased the last decade. 10 years is asking. So for such questions, of course, when the question is asked, the answer may be different. But today if the question is asked, due to COVID, the answer will be different. Okay, so today when we are talking about trend-based questions, keep COVID in mind and think from the logic of COVID. You will get to the answer. For example, simple logic, fiscal deficit as a percent of GDP of India has steadily increased in the last decade. It can't steadily increase, obviously. During COVID, FD has increased and then again it decreased. Now, tax revenue as a percentage of GDP has steadily increased in the last decade. This will also be wrong in the current context, because Tax revenue as a percentage of GDP went down to the lowest in the last 10 years, up to 9.7, 9.8% during COVID. And therefore, this statement. So trend-based questions, keep COVID in mind and try to analyze it. You get to the right answer. Okay. Now, with reference to Indian economy, consider the following statements. Now, see this. The rate of growth of real GDP has steadily increased in the last decade. Now, rate of growth. Growth is a percentage. So, definitely this will be wrong. When he asked the question, it is wrong. Even today, it is wrong. Okay. Now, if you see this, the GDP at market prices in rupees has steadily increased in the last decade. That time in 2015, if you see the number called GDP, there was no negative growth, and therefore this statement is right. It's a number. It's a percentage in the first statement. It's a number. But now if I take the second statement, that number also is not right. Why? Because during COVID pandemic, okay, so our GDP went down. Okay, our GDP went down. So that is something which, so when you take the statistics from 1920, okay, so 1819, 1920, you find a dip in the GDP number. And therefore this is wrong in the current context. Okay. Now see this basic concept of formula and understanding the concept. National income of a country for a given period is equal to 8 ways only. But what you should understand is, when I say national income, the word final should be there in the answer. So final value, here if you see money value of final goods and services, total value of goods and services produced by the nationals. Okay, money value of final goods and services. Now this word final, when I've written the first definition, so total final value of all goods and services produced within the domestic territory. Now that final is more important, therefore 4. So remember that, final, intermediate goods will never be part of the national income calculation. Okay, so that's very important. In the context of Indian economy, consider the growth rate of GDP has steadily increased in the last 5 years. Now this you know, COVID, obviously it can't be. And the growth rate in the per capita income has steadily increased in the last 5 years. No, this also if you see, of course now it has almost doubled when you compare it with 2014-15. Because you're saying 1.76 lakhs. But last 5 years, if I take the data, obviously in 1920, 2020, 21, if you see, you find a dip. So both the statements are wrong. So these are trend-based questions where your concentration should be there. Many times you only focus on formulae. But see, these are all UPSC previous questions only. Now, I'll just try to show you one small graph. Now see this. This is about GDP per capita of India. Okay, so one is, the green one is basically at base year prices, and the blue one is basically the current prices. You will find a dip here. Okay, from 1920 to 2020, 21, you find a dip with respect to the per capita. So here, this dip clearly shows. Now we clearly observe this. Okay, so this is very important. So this dip clearly shows that there is no steady increase. Of course, from 14-15 if we take, okay, 14-15 if we talk about, so somewhere around 86,000, now it is 1.76 lakh. So almost doubled. So that was in news. So there was news like Modi ji's government, there was a doubling of per capita income when you take from 14-15 to now. So but trend if he's asking yes, doubling if he's asking yes, okay fine, it has doubled. Okay, so this please keep in mind. And I hope the basic concepts are clear. Okay, and please do comment in the comment box with respect to the concepts you need and with respect to the topics you need. And your comments are a booster. Please do subscribe and share our videos, and will definitely help you to ace your prelims. Signing off. Thank you.